thank you for joining us. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the program today, Nigeria's manufacturing index expands at 52.9 reading in June. The International Monetary Fund approves a $312 million 3-year credit program for Chad to help boost its economy. Plus, South Africa's Treasury set to unveil an action plan on detailing structural changes and timelines to boost growth to 6%. Let's get started, and we're beginning with that PMI stories coming out from Nigeria's Central Bank, which has released its own manufacturing and non-manufacturing purchasing managers index report for June. A core manufacturing activity was reported higher at 52.9 reading, posting a third consecutive month increase, and non-manufacturing index was better at 54.2 reading. The CBN report says 12 of 16 sectors surveyed shows expansion led by electronic products, paper products, plastics, textile, apparel, leather and footwear, among others. Meantime, investment firm FBN Quest, in a similar report for June, shows its PMI jumps to 55.9 from 54 in May due to FX availability, naira appreciation and improvement in power supply. And to the markets now, and despite the impressive PMI reading, the NSE All-Share Index tilted to the red at intraday, down 0.10%. Egypt was also looking down at intraday, about 0.40%. But the market in South Africa was up at 0.57% at intraday. And Kenya closed down there 0.20% on Friday. In the Middle East, the Qatar stock market stabilized today after a diplomatic deadline to comply with demands by 4 Arab states was extended by 2 days to Tuesday night. The Doha index, which fell 2.3% on Sunday, was up 1.30% at intraday, as some stocks favored by foreign funds were the top gainers. Mobile phone operator Vodafone Qatar rose 1.1%. Foreign funds have been taking advantage of reduced valuations in the Qatari market because of its recent plunge, and have been net buyers of Qatari shares in the last 2 sessions. In Dubai, the index was up 1.22% as 24 shares rose and only 2 declined. Shares favored by short-term retail traders were the most active, with GFH Financial adding 4.4% and property developer Damac jumping 5.3%. Abu Dhabi's index dipped 0.66%, weighed down by the top 2 shares by market value. Telecommunications operator Etisalat down 0.6%, and First Abu Dhabi Bank off 0.5%. In Saudi Arabia, the index edged down 1.42%, snapping 3 days of strong gains. National Commercial Bank retreated 2%, pulling away from a 21-month high. And in Europe, bourses there opened higher today, entering into the new month on a solid footing after markets posted gains for the first half of the year. Our investors also looking ahead of a scheduled $4.8 billion deal between France's Total and Iran, which is due to be signed later today. The Eurozone PMI also came in stronger. Well, for details on the market, I'm being joined by DWTV Channels TV financial correspondent in Frankfurt, Conrad Busen. Hello, Conrad. Welcome to a new week, a new month, and a new quarter.
Hey, Chimi, great to talk to you again.
Right, the Eurozone June manufacturing PMI comes in at 57.4 compared with 57.3 flash estimate. What sectors are leading this strong economic activity, and how are equity markets treating this news?
Well, the equity markets reacted very positively to the news. You can't really tell by just looking at that line right behind me, because this morning the DAX immediately jumped upwards and since then it's been staying on this relatively high level. But that is, of course, a positive reaction to this Purchasing Managers Index. The Market Institute, which makes the survey for this index, doesn't really differentiate between the different sectors of manufacturing. What it does is it asks purchasing managers of all parts of the manufacturing sector in the Eurozone countries on employment, on, of course, the order situation. Also, delivery times and price developments are being asked. And then there's a differentiation between the different Eurozone countries. And I got to tell you, the recovery really has been widespread. In June, not only Germany is the locomotive here in the Eurozone pulling the economy, also in Austria and in the Netherlands, the recovery has been strong, in Ireland as well. In France, in Italy, growth rates have accelerated. Even in Greece, there was positive news. The Purchasing Managers Index there managed to climb upwards above 50 points, and that's the level which indicates an expanding economy. An interesting development was there in terms of prices. While input price inflation slowed, that's the prices manufacturers have to pay for the stuff they need in order to, produce their products. Output price inflation rose quite sharply, and those are the